Hey, Corey Lancaster here with the Lancaster 10X Right Realty, bringing you another episode of Real Estate Talk. And today is I'm trying to keep it short, but it's a very important change that FHA has made that many agents are not aware of because it just came out not too long ago. I mean, days ago, okay? And what that change is, it relates to the student loan debt, okay? So FHA, generally speaking, FHA used to, okay, count 1% of your student loans against you as estimated payment to calculate your debt to income ratio. So you guys know your debt to income ratio will determine how much house you qualify for, okay, what you get pre-approved for, okay? So the max amount you're going to get approved for is determined by your debt to income ratio. So if they have to use 1% as your payment for student loans, right? Even if it's deferred, a lot of people think, well, it's deferred, I'm not making any payments on it. It does not matter. FHA still wants to factor in an estimated payment of 1% because one day it's not going to be a deferred payment anymore. You're going to start paying on that, so they want to make sure you can carry that student loan plus the mortgage that they're making to you, okay? So let's say you got $50,000 worth of student loans. 1% of $50,000 is going to be $500. So they're going to count $500 as a monthly expense to you and calculate that debt to income ratio. The good news is they just modified that calculation where they moved it from 0.5%, okay? So now instead of $500 on $50,000 worth of student loans, it's only going to be $250. You say, well, that's not that much. It is a lot when it comes to getting qualified for a house. $250 savings in your debt to income ratio is the equivalent of about $50,000, okay, in a higher amount that you'll get qualified. So if you were qualified for $400,000 with a 1% calculation, okay, you may be qualified for more like $450,000 with only a 0.5% calculation of that student loan debt. Now there could be some variables, and so it might not quite be $50,000 because you're going to higher home, higher taxes, higher homeowners insurance. Could be a little bit higher interest rate. So there are some variables where it might not be exactly $50,000, okay? So, but just understand that it will be higher by some number, okay? So I want to make sure that you are aware of that and you know that. So if you are thinking, hey, I got to try to get pre-approved 6 months ago, but they told me I had these student loans and that kind of messed up, how much I was going to qualify for, and it just wasn't, kind of houses in that price range. You need to relook at it. Give me a call. Let me have my lender take a look at it. You may be surprised. It might end up being a better situation for you now. All right. Listen, if you like the information you've been getting, check me out on my YouTube page, the Lancaster 10X Right Realty. You'll see all the past episodes that I've done laid out right there. If you have questions about real estate, whether it's buying, selling, renting, or investing, give me a call. I'd love to get those answered for you. Give me a call just on my cell phone, 240-988-3173. All right. Have a good one. Hope to hear from you.